All right, what's the benefits of using a candlestick chart and line chart? You're going to see a lot of people use line charts on your basic apps like Robinhood. I know for the longest time they were using line charts on your financial news outlets like CNBC, Bloomberg, Yahoo Finance. They use line charts. Right now, right here, we're looking at a line chart on SG, as this one's getting momentum and ripping up over 31 just about. Flip over to a mountain chart, line chart. The benefit of using a line chart, you can easily identify with your own eyes either bottoms, trends, areas of interest. Line charts. Now, how do they plot line charts? Most charting platforms, when they chart a line, it's based off of the close, the closing price. So here we're looking at a 1 minute chart. This stock, it can move, and then after 1 minute, the close, it'll plot the close, and then the next line will start. And then after 1 minute, it'll, wherever it's at, it'll close, and then so on and so on. So this stock can go down, make a low, come back, run up and make a new high. That's the thing though with line charts. It doesn't tell you specifically how low a stock went and if it held that low. This is where candlesticks, it comes in a lot more. You get a lot more information. Line charts, they're still a very, very valuable tool to have in your back pocket. With candlestick charts, let's flip over to it real quick. Candlestick solid. With candlesticks and even bar chart, they were using bar chart before candlesticks. Steve Neeson was the one who brought candlesticks to the Western world, and everybody was using bar charts before Steve Neeson brought over candlesticks from the rice traders over in Japan. If you don't know how a bar chart works, they're color coordinated. Most of them are red and green like your standard candlesticks, but with a bar chart, it's just like a candle. It's good. You're going to see these dashes on the left and then on the right. So a bar chart, prices are always going to open on the left with a dash. And then the prices could move up, they could move down. And then once it closes, it's always going to put a dash on the right. So it could look just like this. So you can look at it and see, okay, this price opened up here. It quickly popped up, went down, it made a low, and then it closed right here. It's a lot of work on your eyes, and it could put some strain on your eyes. This is what they used in the 90s when it come to doing technical analysis with line charts. So it's a lot more stress and strain on your eyes. Some people still use bar charts, but I would say they're more of the old timers, very old timers who were around trading from the 70s, 80s, maybe 90s. But candlesticks, it's more appealing to the eye. That's why they're so popular. And it's the same concept with bar charts. Let's switch over to candlestick solid. Now candlesticks, just like bar charts, you get to see fully. The way I like to look at it, you're looking at an X-ray image. So let's say you have a broken arm. You go to the doctor and get an X-ray to see what's inside of your arm, your broken bone. Candlesticks, they're color coordinated. You got the bodies, the full bodies. It tells you so much information. Candles, like the only difference though, so let's see here, we got a green candle. A green candle is always going to open at the bottom. And then look at it like a glass of water. It's going to fill up to the upside, and it could make a low and a high, and it's always going to close at the top. And the wicks, that's the low of that candle and the high of that candle. Now a red candlestick, they're always going to open up at the top. And look at it as if it's a glass of water, but it has a hole at the bottom of the cup. It's just an easy explanation of looking at this. So a cup with the hole at the bottom, it's going to open at the top, and all that water is going to drain out, right? So it's going to close at the bottom. And then, of course, once again, you have your wicks to the upside and to the downside. And with these wicks, it tells you the high that this candle made, but it didn't hold. And then the low that the stock went down to, but bulls were able to bring it back up. And you now have all types of different candlestick patterns, candlestick formations. There's so many candlestick patterns and formations. There's over hundreds of them. Hundreds. I would say the top 2 people to learn candlestick charting from is number 1, of course, the one who brought them over to the Western states and made them popular, Steve Neeson, followed by another popular guy. His name is Steven Bigelow. I think that's how you spell his last name. But these are the top 2 people when it comes to candlestick charting that I would learn from. These are the top 2 dogs. They've both written really good books. And the way I look at it, you guys, the more information you know, the more edge you have over everybody else. A lot of people truly overlook the simplicity and the basics of candlesticks. They look over little small details that people overlook. Candlesticks and the candlestick formations. Like, let's look at one for an example, and we posted a good website here. I'm going to pull it up. I was just on the internet and I found this, but we're understanding candlesticks. You got your candlesticks, your line chart, and we can go down here. Candlestick engulfing. You got your bullish candlestick patterns, your bearish candlestick patterns. Look at candlestick bullish. There's also another technique that's out there. It's called Candlestick Math, where you take a combination of candlesticks and you add them together to form one candle. So let's look at a good example here. A bullish engulfing, that's a good example. And you'd want to look out for these formations on bigger time frames. The bigger the time frame, the more stronger they are. So these formations, you'd be looking out for them on the daily, weekly, monthly chart. You can look out for them on an hourly chart, 30-minute chart. But I would say when it comes down to a 1-minute chart, candlestick formations, they're not really that strong. We already know there's a lot of false signals and breakouts on the 1-minute time frame. So the bigger time frame is your best bet. A bullish engulfing. This stock, I think they give an example. Yeah. So a bullish engulfing is something like if this stock is in a confirmed downtrend, like so here, you have your red day right here with the long wick. Bulls were able to bring prices back up. It's got a little small body on it, something like it does these last days here too. But then the next trading day, you have a huge, gigantic green candle. That's a bullish engulfing. This green candle was able to gobble up and eat this last trading day like Pac-Man. And if you really look at it, this one green day here was able to consume not 1, but 2, 3, maybe 4 of the last trading days that were red on this stock. So people would be looking at this as a bullish sign that the stock is potentially wanting to reverse and bulls are starting to come in and take control. And what did this stock do? It broke its trend right here, had a nice pullback, and it continued to push on up. It's a full understanding of candlesticks, and it takes a minute to really grasp the understanding, the fight that's going on between the bulls and the bears. We'll look at another example with the candlestick patterns here. The morning Doji star. And these are the basic candlestick pattern formations that all traders should know about. And if you guys go through and you read Steve Neeson's book, I'm going to show you which one it is, and I've made countless videos on this. If you read this book right here, Japanese Candlestick Charting Techniques, this book is going to give you and tell you everything that you need to know about when it comes to candlesticks. I think if you're a part of this Discord here, you guys, if you scroll down into the education section, go to the book recommendation, scroll up. Let's see. I believe I have the PDF book. Yup, right here. Number 7 on the list. Japanese Candlestick Charting Techniques. Click on that link, and there you go. You got the PDF book right there for you. It's got all kinds of great examples in here. I really loved this book, and I went and bought the hard copy of this book because it was such an amazing book. It gives you so many great examples. Like, let's look at this one right here. And as I said, you'd be looking out for these patterns, like on the daily chart, bigger time frames. So an evening Doji star here is if a stock is in a confirmed uptrend, and then you get a big green day here, that's the exhaustion move. Then day 2, you get a doji. If you guys don't know what a doji is, a doji is a cross like this, a white cross. And what it is, stock prices opened and it was a fight between the bulls and the bears. For a moment, the bulls were in control. They raised it up, but then the bears came in and they took it down. They were able to take it down and make a new low. But ultimately, bulls came back in, lifted their horns, and fought prices back up. And then they closed at or near where the stock opened. So that's a doji. Consider it, looking at it like it's a tug of war and there's indecision. We get a gap up and it's a doji. Traders would be looking out for, hey, this could be a sign, a reversal. The next day, we get a slight gap down. The morning spike failed on it with this little upper wick, day 3, and then we sell off as the day progressed. And all the bulls jump ship, all the bears start coming in, they short the stock, and that's a 3 candlestick formation that you could be looking out for. Then you have the morning doji star. It's the opposite of the evening doji star. And as I said, these are basic candlestick formations that you should know. You should. These are the basics, you guys. Like I've said, it's about focusing and studying on the little things that a lot of people just overlook. Most people come into the stock market, what do they have on their mind? Money. They want to just start making money as soon as possible. So what do? Oh, candlesticks? They just quickly brush up on, okay, how do I read a candlestick? And they read and quickly look up on Google, okay, that's how a green candlestick is formed, and that's how a red candlestick is formed. All right, I know everything now. And then they go off and then they try to read all of these stock charts just off of that information. So the more you guys study, the more edge you have over everybody else. Because we know a lot of people out here are lazy, aren't they? They're lazy, they're content. They don't want to study. They don't want to better themselves. They just want hot stock alerts and hot stock picks. And they want to rely on somebody to make money for them. All right, real quickly, because I forgot, we're going to jump into the benefits of line charts. We're looking at a bigger time frame here right now, currently on candlesticks. But let's take a look quickly on line charts. Now, with line charts, and we've already explained it, it's plotting a line after every close. The importance of line charts, you really get an idea of where a stock's support is, resistance, and areas of interest. You'd really want to be looking out for the V shape on line charts. So we can pull up and see here on SG, there's a lot, like when I say V's, you want to be looking out for like this, either sharp stabs up or down. That's what you want to be looking for. That's telling you that's an area of interest. Prices are getting rejected. We could see here at 33 bucks, you draw a line straight across. There's a lot of V shapes pinpointing right up to that level, right? And then as prices go down, you could see it was holding up all here. The bottom line with line charts, it's easier to identify patterns and look at areas of interest. Even here, you could see it wedged out here and then it fell right through. So that level where it fell through, I probably would want to be paying attention to that level. And if I draw my line out, you see the stock came running back up. And look at right where it found resistance, right? It even geared up before it exploded up over that level. It geared up, ripped up, then it was holding as support and continued to push. And now we're working our way up back to these previous levels up here. The bottom line with line charts, And it's still good to use line charts. You can put them up in comparison side to side with candlestick charts and change it to a color easy on your eyes. What I would recommend for easy color on the eyes, I would say either, where is the line at here? I would say either white or yellow. White or yellow is what I would use. And again, this is easy on the eyes. I think statistics have proven that that's why they have yellow note paper, because when you're writing, it's easier for your eyes to adjust. So I think yellow is a natural color and easy on your eyes. And ask yourself, doesn't this look a little bit more eye appealing? And you can easily spot out patterns or areas of interest versus, now let's switch back over to a candlestick. With all the colors going on, the upper wicks, the bottom wicks, sometimes it can sidetrack you from focusing on patterns, areas of interest. So use it to your advantage is what I'm trying to get across here. It's a lot easier on your eyes, and you can identify maybe something you've missed on the candlestick chart. Don't be scared to try it. Either a mountain or a line chart. Don't knock it till you try it. All right, you guys, I'm Mr. Wolf. As I always say, have that patience, have that discipline, study, study, study. Later, guys.